Goldman Sachs comes out with a report every year that says, here are the top 5 things in the world that are going to be game-changing for the next generation. Financial services are not normally in that category, and blockchain was in it last year. But I agree with you. I think the blockchain is both a disruptive technology, but also a huge efficiency component to why you need to do it, right? My lens to blockchain is through the capital markets application of blockchain. All the other stuff is amazing and blows my mind. I'm not smart enough to get that part. But in the capital markets and financial services industry, we've been innovating on the front end or front office for 30 years, all the way back from the predecessors of E-Trade, all the way through to some of the crazy front-end stuff with robo-advising and stuff that we see today. There has been very little external innovation outside of the incumbents themselves on the back office. And the blockchain, as it relates to capital markets, if fully adopted and utilized industry-wide, it takes a village, but it makes a lot of sense for every single villager, except a few of the middlemen, then it would be wonderful. What blockchain does in capital markets is it allows an issuer, someone who's trying to raise money, to negotiate and enact and be able to continue the future processing of their transaction with an investor. So it connects the issuer with the investor with no middleman. Now, you still need an investment banker up front, so don't worry, bankers, because you still need to be able to fill the deal and get the first kind of issuance done. You build the book, you get your 6%, God bless you. But everything subsequent to that is the need is obviated. Settlement system, cash flows. If it's a 30-year bond, every single dividend payment is going to be automatic. It's going to be self-regulated. The secondary market will be more efficient. Transparency will be there. The regulators will love it. There's no need for a custodian, a transfer agent, a proxy solicitation firm, and I could go on and on and on. It is fully automated, and it is fully complied with by the consensus of the members that are owners of that security. It's tremendous. I think that it would probably allow a Fortune 500 company, if they were going to issue just a 10-year bond on the blockchain instead of a DTC eligible security. I've seen estimates of 30 to 100 basis points per year in overall costs that just the system sucks up. And in the end of the day, that's going to go to the issuer on day one, but at some point that will filter through the industry. And if that happens, it's going to be tremendous. And I can assure you that right now there is a Fortune 50 company, maybe Fortune 100, that is contemplating doing the next $500 million debt deal, $400 million the good old-fashioned way, and $100 million the new way. And the big asset managers out there, all the names you know, and I'm sure many of you in the audience, you're going to be purchasers of that thing. Now, will you price it exactly the same on day one? I hope so. I don't think so. But at some point, you will price that at a discount or a better price to a DTC eligible where you don't disintermediate the back office, because that's what this does. And it's tremendous. And I really, really hope everyone comes together and makes it happen.